How far in advance of my renewal should I be talking to you guys?
We solicit renewals 60 days prior to the effective date. Everyone seems to focus on premium and then probably premium right after that. Imagine a scenario where you actually do have a claim. And so take the time to see, what is this policy? Is it doing what I think it should? Is it protecting what I do? Do I have any questions? Insurance is important. Keeps your business in business. And you get that wrong, it can be a serious problem. Ask yourself, what am I doing now? Is it the same thing I was doing 10 years ago? Am I with the right carrier if I have a claim? And how are they going to be there for me? These are all tough to answer things, but things you should be asking.
Welcome back to Keys to Real Estate. I'm Mary Schuster. Well, last episode, we spent time understanding TIAC, where it came from, why it was created, and why title-specific E&O coverage matters in ways many professionals may not fully appreciate until a claim happens. And today, we're going to get more practical. My guest again is Casey Withers, Program Executive for TIAC. And in this episode, we're talking about how title agencies should actually evaluate coverage and the providers beyond just premium. What policy owners sometimes overlook in exclusions and deductible structures, and how cyber and wire fraud risks are reshaping the marketplace, and why products like surety bonds and standalone cyber coverage are becoming more important parts of a title agency's overall risk strategy. So here's part 2 of a conversation that will help you protect your agency with Mr. Casey Withers. The presenting sponsor for this season of Keys to Real Estate is First American Trust. First American Trust redefines banking for title and escrow companies. They offer innovative solutions that integrate banking functions directly into title and escrow software systems, enhancing operational efficiency and safeguarding financial transactions. At First American Trust, you have direct access to a personal relationship manager who delivers answers in real time. First American Trust is also recognized as an elite provider for the American Land Title Association. As a wholly owned subsidiary of First American Financial Corporation, they have roots in real estate tracing back over 135 years and is the only bank owned by a title company. With deep roots, advanced solutions, and a commitment to real relationships, they are setting a new standard for the industry. The future of banking for title and escrow starts with First American Trust. Visit firstamtrust.com to learn more. Casey, welcome back to Keys to Real Estate. Looking forward to this week. Thanks.
Yeah, good to be back. Hopefully we got some return listeners this week and they weren't too scared off from last week.
No, I think they're back because today we're going to talk about how they evaluate coverage and providers and make some more granular choices. So let's get right to it. When a title agency compares E&O providers, what should they look for beyond the premium? The premium's the easy thing to spot, but what else should they be looking for and at?
Yeah, they tend to look at premium for sure. And other things that I don't know if these are in any specific order, but I would look at longevity and commitment to the space, right? Maybe that is number one, and maybe that's self-serving because TIAC is longevity and commitment to the space, but it is important, right? You get carriers that are providing E&O, they dabble in and out of different classes, part of E&O, and now I don't want to write this, now I want to write this, and I want to get in and out. And that doesn't do you much good because you're scrambling to find carriers every 5 years or something like that. So someone who's been around and who's actual paid claims, that's also a good one, and has a willingness
to pay claims is important.
Has a willingness to pay claims and has a willingness to not pay claims, right? I mean, that to defend the insured when it's not a valid claim. We've seen that's the royal we've seen every claim out there, and we know which are legit and which aren't. You have other, is there any additional coverages that the carriers added on that's specific to the space that has evolved over time, right? To enhance the coverage along with what you need as an insured. And then again, probably self-serving as well, is we talk about real people there. These people I can get in touch with if I have a question. Am I going to wait in line for the phone for 3 hours or whatever? We do a good job of getting out our number or an email or any of that sort of stuff, and you get a real live person. Hopefully not me, hopefully somebody different, but yeah, we have somebody who can answer your questions.
Well, and I've heard a lot of agents fuss sometimes about exclusions only after they've found a gap in their coverage. So I'd like for you to talk about that. I've heard some rumblings about deductible structures with some of these providers that don't live in the space like TIAC does, that maybe some deductible structures can be maybe less favorable. And also, I'm wondering, God forbid, you're going to have to make a claim. What should the experience be like? Like, how do people measure or compare what those kinds of things are across providers, or what they should expect?
Yeah, sure. And I'll take the first part too, which is sort of your exclusion. So, and I have a saying, I don't know if anybody else uses it, but I have a saying that everyone's friends until there's a claim, right? Everyone's, oh, we're great, everyone's doing great, we love each other, and then bang, a claim messes all that stuff up. So it's important to know what you have before you get to, you don't want to be sorting out your policy when you have a claim. So that's a tough question, right? Which exclusions are the most important? They're probably all important. You want to make sure that you read your exclusions. This is probably very obvious, but read your exclusions. A lot of them you'll find are standard, like, we're not going to cover war, or we're not going to, we probably don't really care about that. But there are a few in there that could potentially limit your coverage. So if you have a question about them, circle them, send them in, and we can explain kind of what that is, even if it's your old carrier or whatever. The claims, I'm going to argue, claim is where, and I've seen in my career, claims is where you gain and you lose clients in the claim process, right? Again, everyone's friends, so you have a claim. And how you're handled as a claim. Can you get a real person, right? Can you get feedback? Is there communication? Are you involved in the claims process as much as you want to be as an insured, or we say, hey, guess what? We just settled your claim for $2 million anyway, and you go, wait, I didn't do anything wrong, or boy, would I like to have been a part of that. So we have in our policy, we're not allowed to settle claims without insured approval. So there is what's called a hammer clause, which they've got to rename that because it sounds pretty awful. But a hammer clause is like, hey, I'm an insurance company. I say, we're going to settle for 500 grand. You say, no way. And then we go, okay, fine. And we go, now we have to pay $1 million because it went the wrong way. You have to pay some portion of the difference of that just so you have a vested interest in that. But there are some other carriers that the insured doesn't have settlement authority, and we do. We tend to collaborate with our insured prior to making any sort of settlement.
That's really cool. And I'm assuming you have in your claims world some title-specific underwriting and claims counsel experience. It's not just some guy named Joe that knows how to that has a JD and knows how to spell real estate.
Yeah, no, I don't know what else they've ever done. I worked on this account. I worked with the TIAC in another role 15 years ago, and the same claims people were there. So I'm not sure what they've ever done besides title agent claims. That's all they do day in, day out. They might do some other stuff I'm not aware of, but I'm pretty sure 95% of their day has been these claims. I'll get a claim in, I'll call the guy that runs it, and he can tell me pretty close to whether one, it's going to be a claim, and two, what sort of dollar amount we're talking about, which is pretty unique, especially given some of the specialization around this class of business.
Yeah, it really is unique. That's a fuss I've heard since I'd started in the business in the late 90s, is that, God forbid you have this problem, then you're trying to educate the claims counsel about what it is you do. And it's like, well, you didn't need education to take my premium, but
yeah. It shouldn't be telling you this on the back end. Yeah, exactly.
Find time to find that out.
Yes, exactly. Yeah.
Good. All right. Are there any questions that an agency should ask before they sign up for coverage? They're get that binder in place? Is that the last chance to ask anything? Or if you've seen the agreement, you pretty much got it?
Yeah, it's certainly not the last chance, but it's the best time to do it versus when your policy's enforced and then we have to change something or endorse something or you got something you didn't think. So if I was an insured, I'd say, what's your definition of professional services? Is what I do that? That's question number one. Some of them are easy, right? I'm an abstractor and this is what I do all day long. Okay, that's covered. But if I do XYZ, which might be a little tangential to the standard sort of operations that someone can do, then that would be a good time to find that out. Is XYZ sublimited? What if I have a $1 million security breach on the cyber? Is that covered? Well, the short answer is no, but you don't assume that your policy is covering something that might be on the fringe.
Well, and those coverages have been changing a lot in the past few years too, that I think if you haven't been paying attention super tightly to your agreements and you just kind of go, oh, generally it looks the same and hit renew, you've got surprises lurking in there, negative ones, I would suspect.
They do evolve unless you've got maybe with a retail agent and their job is to tell you about those changes. But if you're coming direct, like most of our insureds, you're probably not picking up on the comma change in Article 2 related to whatever. And I will say our core policy hasn't changed in 11 years. What we do is we add endorsements, right? So endorsements on the back, you buy this or that or this and that. So you can endorsements are a lot easier to track than, hey, I removed a sentence on page 18 that you probably didn't notice until, again, you have a claim. So we try to be consistent. Any upgrades or downgrades are endorsed on the back, so they're pretty clear when it happens year over year.
That is also a handy feature.
It is a handy for me, too, yeah.
Yeah, I'll bet. I'll bet. Where have you seen that agents can mistakenly create coverage gaps for themselves?
I think the biggest one, this dovetails from our conversation last week on claims made. That's where you can get your coverage gap problem. So you go and you move carriers. If you've been with the same carrier for your whole life, that's fine. That's fine. You have a retroactive date, sorry to abbreviate that, retro date that goes back to probably when you started your agency. So you just keep renewing that every year, and boy, that's all taken care of. The problem is if you switch or you change entities or whatever, you need to make sure that whatever happened at the old entity or whenever, and it gets reported during your claim period, remember claims made during the period, that's covered. Otherwise, that's the first thing that our folks will look at is, okay, when is your retro date? When did this thing occur that resulted in this claim? And was that covered? That's question number one. And again, assuming it is, they move on. So your biggest coverage gap is that you've done something and it wasn't covered to be picked up during your policy period.
Okay. And is that negotiable?
The retro date?
Yeah.
Yeah.
Okay.
Yeah, you tell us whatever. Yeah, it's just up to, we can't tell you what it should be for the most part. You got to make sure that you've always you have no retro date and you just kind of buy claims made all together, or your retro dates line up versus where you came from or whatever. And we can help you with that. Okay. It's not up for you to answer by yourself. We would just need a little bit more information. You just tell us what it is and we just input it right there into the old magical rating model.
Okay. So that's not a reason not to change. It's just an item to put on your checklist for discussion.
Oh, yeah. Oh, no. It's not a reason not to change.
Okay.
In fact, it's one of the first questions we asked. If someone leaves it blank and they're a new insured, we say, is that really blank, retro date? Or did your old policy have one? Here's where you find it. Look on the deck page. It's probably right there under retroactive date. And we need to make sure that's the same so there's no gap in coverage.
Okay, great. Well, we talked last week about why TIAC came to be with Alta and the agents in that ownership structure. And I did not know you'd been around 40 years. So I've also learned something new. Yeah. We've been reporting that there's still, again, a lot of volatility. We've got new players coming in, again, less expertise, changes in coverages. I'm just wondering, what are you seeing from your vantage point in the greater marketplace that potential insureds are having to deal with or getting bit with that they don't realize until it happens?
It's a much better place than it was, like we discussed last time, 40 years ago, right? It's not as everyone pulling out at the same time, all this sort of stuff. We do see some carriers who have pulled out of E&O or this type of E&O, and it's more of a kind of baby with the bathwater situation where they're just like, hey, we're going to get rid of this, title agents in there, whatever that is. And it's just, sorry, you're just not renewed. Don't, nothing personal, that sort of thing. So that gets back to the more generalist or lack of focus in the specific space, right? If they pull out, hey, we're going to get out of this sort of professional, it just happens to include that and nothing result specific, then guess what? You're kind of out of luck. So it's not happening a ton. It's happening a little bit right now, but any shift in the market, whatever that's caused by, whether it's real estate or not related, you could find yourself one day without cover just because somebody woke up and decided they don't want to be in the E&O space anymore.
That's going along in insurance generally, except for title. We're not backing out.
No, not us. We're here. But you're right. You run that risk in most lines if you get with someone who's not committed for the long run.
Yeah, insurance looks like a great business to be until the claims start, and then people tend to run away sometimes. I was wondering what risks are becoming more expensive, or like what risks are you seeing more frequent claims on, or what's more difficult to underwrite? Is this everything's always evolving. What are you seeing?
There's a lot of movement, as there has been in the last 10 years, on the cyber side, right? Cyber is an interesting line of business, and it's one that people spend 5 or 6, 7, 8 years getting educated on. And this is like early 2000s. And then they're like, oh, wait, we finally need this. Now a lot of people buy cyber. So it's been an evolving coverage. And as a result of that, a lot of the folks who might have covered cyber in the past and didn't mean to, like say your E&O wasn't, there's a lot of that out there. It's called silent cyber. That's industry lingo there. Silent cyber, it means you're picking it up because you didn't say you weren't. That's evolved over time. So the professional lines policy is pretty clear that it's not a full cyber cover. That's been a tough one to underwrite when you get folks with different sort of exposures. The number one, think they're covered under an E&O, but they're not. And you say, hey, we can't cover your whatever it is. We're not a technology policy. We're not a cyber policy. These are all different and sort of bespoke policies that are now their own thing. Whereas 10, 15 years ago, they might have been all muddled together.
So with the E&O specifically, what should a strong title agent E&O policy feature include? Have we talked about everything, or are there more elements people should know to specifically ask about or look for?
We've talked about a lot of them, right? Again, professional service definition, is it covering what I think I do? Is it excluding what I do? By the way, I want to check that out. That's not good either. Consent to settle, we just talked about, right? That's the one where we check with you before we make any sort of settlement, which is to make sure that we're all on the same page before we agree that we did something wrong when maybe you don't think you did something wrong. Does it have enhancements that are specific to your space, right? If you look at the TIAC policy, we have a nice policy, right? But we also have endorsements on the back of it that can help you out. So we are not only ALTA, but we are founded in conjunction with some of the big title underwriting companies back in the day that are still the big title underwriting companies. So if you write a majority of your business with Stewart, for example, you get not only a pricing credit, but there's also a deductible reduction endorsement that we put on there. So if you have a claim that's involved with a Stewart as the underwriting company, because you have met certain thresholds to be, one of their agents, we reduce your deductible by 50%, right? So again, that doesn't mean anything up front when you're never going to have a claim, right? I'm never going to have a claim. So when is that going to matter? Yeah, don't care. That doesn't matter, but it does when you have a claim. So that's a good one. We have added what we call client funds protection, which I'm going to call it cyber light. It's wire fraud. When you're not in on it as the insured, right? So an employee goes rogue, or you get social engineered out of money and you wire it to the wrong guy or whatever. We do provide $100,000 of coverage for that, subject to a deductible as long as you're doing certain X, Y, and Z verification protocols. So that's something, right? And that costs $500. And why everyone doesn't buy that, I don't know. I would not rely on that as your main cyber cover, but it's a nice cover that we have to tack on to our standard offering to evolve with the times.
Fantastic. Did I hear recently something about surety bonds? Are you offering surety bonds?
You did, yeah. I think it was, oh boy, I can't remember. Maybe within the last month, we provided on our website the ability, an online platform for surety bonds to be purchased, right? In fact, it's funny, this came down, we were at the board meeting for TIAC and talking about how can we offer more than just E&O, right? Now, I want to go, if I've been insured, I've got all these needs. I don't want to go to 9 different places. How do we become more than just an E&O carrier? And like 3 board members stood up and said, what's really irritating is surety bonds, right? They're required for all these sort of things. And again, surety is, if I'm a property and casualty guy, surety is a whole thing. I don't really understand it. I know it exists. I got a general idea about it. It's irritating. It's basically someone is vouching for your ability to pay in the event you steal or whatever, don't live up to your requirements. It's different than a P&C claim. They're irritating. They're required usually on the state level. State by state vary. They don't cost very much money, which is great for the insured, but bad if you're trying to find them because no one really has the time to get excited about a $28 notary bond or something like that. So now on our website, you go in there. I'm Mary. I'm a notary in Ohio. I go in there, Ohio. I type in notary. It lists all the required bonds. You click on there. You fill out your application. And I think it's like 75% of them are instant quote, instant bind, and instant renewal. So you bind it, it renews. Another thing off your list you don't have to worry about. We've had some pretty good feedback on that.
Great.
And again, this is all part of us trying to be not just your E&O solution, but your insurance solution for your business.
Nice. All right. You mentioned the notaries. Are there other scenarios that have bond requirements? Like back in the day, I don't even know if this is true anymore. Back in the day, there were a couple big commercial deals I had that I had to be bonded as the commercial escrow closer. Is that kind of stuff?
That stuff is yes. And again, we'll talk to our surety guys, and this is one of our strategic partners we have, and they'll talk about it till they're blue in the face. There's surety bonds for everything. It's crazy. I thought there were like 4, right? And it turns out there's a zillion. Almost literally a zillion if that was a real number. It varies by state. Everybody requires them for different things. They're a pain to keep track of, all this sort of stuff. So what this marketplace does is, I wouldn't leave it up to the marketplace to figure out what bonds you need, but certainly it's a good resource for what bonds may be required in your state by what you're doing. I've been told there's bonding and surety requirements for about everything you can think of out there. Again, varies by state, but some states are more, some states have more of them, some have less, but there are a ton.
That sounds like a handy tool.
It is, for sure.
All right, you mentioned cyber and fraud, and I want to drill down into that a little bit if we can, because, I think a lot of people are confused is probably the best word about their cyber coverage and the wire fraud and what policy is really going to have their back and which, as you mentioned a little bit before, is a supplemental. So how should people be thinking about this differently in these times? What should they be doing differently? Like, how can we get people the best posture for protection?
Sure, and I'll reiterate the fact that I'm no cyber expert, right? They are very, I zone out when they start talking because it's essentially, it's very technical. It's a standalone unit of people that all they do is cyber all day long. So best, as an overarching statement, I'd say don't assume that your E&O policy or anything that's not a cyber policy is going to provide you cyber.
Treat it as its own specialty, handle it as its own, get your own unique product for that.
That's correct.
Okay.
I mean, some of them have a little bit. They'll have cyber light, which again I referenced. We kind of have, but if you have a concern around what is probably a legit cyber breach or first-party notifications or any of this sort of stuff that all go along with the cyber. And again, I've also found in my career that cyber is one of the claims handling and the claims response times specifically are key to getting those things resolved, right? And the ransomware and all these sort of crazy things that you better respond within 12 hours. I mean, good luck getting a generalist claims handler to respond within 12 hours on something. So you need to make sure you have the correct coverage for that. So there's a lot of folks that reach out to us and say, do you provide cyber? The answer is kind of in our policy. We don't have standalone cyber, but the good news is coming to a theater near you here, we are looking to expand the product offerings on the TIAC website to include, no timeline on this so no one holds me to it, but in the near future, cyber, BOP, which is a business owner policy, that's the GL property sort of deal, workers' comp, all things, again, part of the initiative to be a total insurance solution provider outside of just the E&O. So that's coming, and so it's a little longer than we would all like it to do. But this way we can say, hey, your E&O doesn't cover it, but here, if you look just to the right on the website, click that button, put in information, and we can get you a policy. It may not be through TIAC, but be through one of our other partners.
That's great. That sounds like such a great resource to have that bundle optionality. And then with people who not only know your business or are in your business with you, like that's pretty exciting. All right. So if we can,
everyone keeps asking when it's going to be done. And
when is it going to be done, Casey?
Stalling, but it's coming.
Well, that's good. That lets you know that there's real demand out there for it.
For sure.
Yeah. All right. So if we're going to send people out of here with one piece of advice for like this week, they may not be renewing this week, but what's something you'd like for them to look at and be certain of and get their sleep in at night because they've checked out a potential hazard and they're either not covered or they need to act before they call you when it's getting close to renewal time. And by the way, that's the second question I have. How far in advance of my renewal should I be talking to you guys? Like, how does that go?
We solicit renewals 60 days prior to the effective date.
Okay.
So when we say, hey, can you get this back to us 30 or 45 days prior? That gives you enough time to get your quote because you need your cert for all your lenders and everybody else when you're doing your transactions. That'd be a good time. Not after you bind it, not 5 minutes before you bind it, not as you're binding it, but part of that would be a great time to ask. My recommendation would be, right, so everyone seems to focus on premium and then probably premium right after that, right? They get wrapped around the axle, but let's take a step back and try to imagine a scenario where you actually do have a claim. And so take the time to see, is my policy, what is this policy? Is it doing what I think it should? Is it protecting what I do? Do I have any questions instead of just great, bought it, that's over with, thank God. And then, move on because it may be because I'm an insurance guy, but insurance is important, right? It keeps your business in business, and you get that wrong, it can be a serious problem. Ask yourself, what am I doing now is the same thing I was doing 10 years ago? Am I with the right carrier? And God forbid I have a claim. Am I with the right carrier if I have a claim? And are they going to be there for me, or are they not? So these are all tough to answer sort of things, but things you should be asking, maybe not every year, but every 5 years, whatever it is, take a look and make sure you're buying what you think you bought.
That's fair. And if they're not sure, like maybe they haven't done this for a while, or they just want to know their coverage is what they think it is or not, can you guys help them compare and contrast and look at these things and help them find out where they're short or how they're covered?
Yeah, sure. You can reach out to us. You can also Alta, who sponsors us as well. Their website's got a ton of information on it. Again, we're hoping you don't go it alone, right? You can pick up the phone, you can email, you can do whatever you want. And if you have a retail agent you're going through, they can do it for you. They're good at that as well. So just don't be afraid to ask the question and stay on top of your big mean insurance company and make sure they're answering your questions.
Well, Casey, that's awesome. Like I said, we've had a lot of people coming to us with these questions. They know it's a time of change in the industry, and it's so great to know that there's a 40-year-old resource out there built by the people in their industry that can be a good solution for them. So thanks for helping with the awareness today. Thanks for helping with the recommendations. And we'll link to get a hold of everyone there at TIAC and TIAC's website and the show notes. So if people want more information, they shouldn't hesitate to look you up.
Yeah, that's great. And I appreciate the forum and the opportunity to wave the TIAC flag a little bit. It could be a little crowded out there sometimes. So, any chance we get to remind people that we're here and we're devoted to the space, we'll take it. So appreciate your time very much.
You bet. We love to highlight quality solutions. So thanks everybody for joining us today. We'll see you back next time.
Bye. Take care.
That was really great information, Casey. Thanks again. Audience, one of the recurring things in this conversation was that insurance decisions can't really be made on autopilot anymore. Between cyber threats and wire fraud exposure and changing policy language and evolving business operations inside of title agencies, this has become a much more nuanced conversation than simply comparing premiums once a year. I also thought Casey made an important point that the real test of coverage isn't when you buy the policy. It's what happens when you actually need help or guidance or, God forbid, claim support. So we've included links to TIAC in today's show notes. And as always, thanks for joining us on Keys to Real Estate. We appreciate you spending part of your day with us. I'm Mary Schuster for October Research. We'll see you back next time.